I am Dhruvi, the hotel manager. I focus on day-to-day operations like staffing, guest experience, and making sure our revenue strategy actually works on the ground.
And I am Hasti, the hotel owner. My focus is on the overall business, profitability, long-term value, and ensuring our pricing decisions support sustainable growth.
Hi, I am Disha. I handle revenue strategy for the property. Okay, so before we get into all the details, I think it will be better if the three of us look at the strategy view inside RevEVOLVE together. That would help us see pricing, pickup, and demand signals all in one place instead of jumping between multiple reports.
Yeah, that works for me. I've actually been wanting to understand what we should really focus on for the next few days. And for the last 2 weeks, we applied a few clear strategies on the softer days. And we can see that it worked well. So let's do this together.
Yeah, we know that early January is usually a softer period. Holidays demand is gone. Business travel is just starting to return and bookings come in slowly.
Same here. I just want to be clear on where we stand right now and what needs our attention going forward.
Perfect. Let's just walk through what we are seeing and figure out what actually makes sense for the business and for the operations. So, looking at the first half of the month, occupancy is still pretty low. We are talking anywhere between 25 to 50%. On several days, we still have around 20 to 30 rooms that need to be sold to match last year's numbers.
Okay, that works from an operations standpoint. We can align staffing efficiently and stay ready if bookings start to pace faster.
Yeah, but here's the thing. Our ADR is actually holding steady at about $55. And this is exactly where pricing ladder helps. We are not guessing rates. We have defined our flows and step in advance. So even on the soft days, we are holding structure instead of reacting emotionally.
I hear you. I don't think it's a pressure situation yet, but I also wouldn't say everything is quiet either. I'm looking at dates like January 2nd and 3rd. Those are already at 42% occupancy. That means they could move fast if things pick up. So, operationally, I'm not going to overstaff right now, but I'm definitely starting to plan for flexibility, especially for housekeeping and front desk.
Okay, that makes sense. So we are not reacting aggressively right now, but we are also not ignoring what we are saying. That's good. From my side, what's important is that we don't rush into discounting. Our ADR is already holding between $54 to $60. If demand does build up, I would rather protect the rate and maximize the revenue we make on those days. And I don't want to chase volume too early and leave money on the table.
Yeah, because once you cut the price, you can't really take it back.
Exactly. So let's be smart about this.
Okay, the hotel is clearly operating in a below 50% occupancy phase, especially midweek. But pickup is present and more importantly, it is consistent.
Alright, so we are clearly operating in a lower occupancy environment overall.
Right, but this is where averages can be misleading. Demand doesn't behave at a weekly level, it's behave date by date.
Meaning the lower occupied weekdays shouldn't influence that much.
Exactly. If you look at this view, midweek dates are sitting closer to 25 to 35%, while the first weekend of the year are already closer to 50%. Those are completely different demand situations.
Okay, so by averaging them together, we are losing the real signal of what each day is actually doing.
Exactly. When we look at the week as one number, we miss the differences between days. That's why focusing on each date works better because every day is asking for a slightly different approach.
How does this compare to last year at the same time?
Now, if we layer in same time last year, the picture becomes clearer. At this point last year, we were actually sitting ahead in occupancy on several days, but we were doing it at lower ADR. This year, occupancy is pacing a bit behind on the same days, but rate is holding better, especially on the weekends.
What about pricing? Are we aligned with the system forecast?
Yes, system forecast for most early January dates is sitting between 67 to 71%. while our optimal bar is steady at $58. That gap tells us there is no urgency to push rates yet, but also no reason to discount. So, as we look at the first half of the January, we were priced slightly below the comp set, which helps us stay competitive without giving up rate. For the second half of January, pickup starts smoothing out and STLY occupancy catches up. If we protect rate now in the first half, we give ourselves rooms to capitalize later in the month without having to recover ADR.
Okay, so we are intentionally sitting a bit below the market.
Yes, early January demand is still price sensitive. Being about $7 to $10 below the concept helps us capture more bookings without putting pressure on ADR. Once pickup strengthen in the second half of the month, that gap gives us room to push rate instead of trying to recover it later.
Yeah, so we will reconnect after 15 days to review how our strategy performed during this period.
Alright, it's been about 15 days since our last review, so let's look at what the data is telling us now that we are at January 16. At the start of the month, we agreed on a very clear approach. Stay patient, hold rates, don't force occupancy, and let the demand comes in naturally.
Right, I am curious to see if that patience really paid off.
Yeah, so if we look at the first half of the month, occupancy is clearly moved. We started the month sitting just under 60%, and overall, following days we saw several dates move into low to high 60s, with one of the stronger mid month dates closing at 68% with around 70 rooms. What's important here is how that happened. Even as occupancy improved, ADR stayed stable, mostly between $55 to $59. So we didn't buy occupancy by dropping price. The demand absorbed the rate. When you look at the pickup across the same period, the pattern is consistent. Bookings didn't rush in early. They build steadily as we go closer to arrival, with many dates adding 40 to 50 plus rooms in the final stretch. That tells us demand wasn't missing, it was simply booking later, which is typically every January look like. Now, when we shift our attention to the second half of the month, the picture looks very familiar. Right now, some near-term ends are already sitting close to 60 to 65%, while further out dates are still much lower, around 30 to 40%. And at the end of the month is still sitting in the low 20s with limited rooms on the books.
Okay, that's almost exactly what the first half looked like on 1st January. Lower occupancy, but early pickup starting to form. I like that we protected rate in the first half. I just want to be sure we don't stay under the market for too long if demand accelerates.
From an operations point of view, the pricing ladder helped a lot. There were not any sudden rate drops, so pickup stayed smooth and staffing was manageable. My question is, at what point do we start preparing for rate movement in the second half?
Good question. So for the second half, the strategy doesn't change. It just repeats. As long as occupancy stay under 50%, we remain slightly below the market. We keep a close eye on 3 to 7 day pickup, and once we see the pickup accelerating consistently, not just on one date, we move up the pricing ladder in steps, not in one jump. That's way demand earns the rate move, we stay in control, and we don't give back the ADR we have already protected.
That gives me clarity. No sudden shifts, just readiness.
And from a business point of view, this shows why structure matters more than reacting daily.
True. So the takeaway is simple. The strategy worked, the numbers support it, and the pattern is repeating in the second half. We stay disciplined, watch pickup daily, and only move our pricing when the demand actually earns it.
This was really helpful. Seeing the strategy before and after makes the reasoning very clear. Thanks for joining us today. We will be back with more practical and insightful conversations like this. And if you are in a revenue management space and want to explore more such insights, take a look at some of the other powerful widgets at RevEVOLVE.ai or feel free to schedule a demo with RevEVOLVE. See you next time.